that rainy day. So on a personal side, I've seen it work for me, for those who have had persons who have died and have the living peace policy, and for those who have had illnesses, both your medical insurance and if for those who have critical insurance, they realize it came in handy at the time. Otherwise, if without insurance, whether it's from the workplace or personal, and an illness occur, or one of the critical illness occurs, such as the NCDs, cancers, etc., it can wipe out all the wealth which you would have built up over time. So tonight, we have with us Miss Marsha Ray McBean, who is, I've known her personally for the last 4 years. She's a broker from Caribbean Assurance Broker, and it's through her convincing the company then bought some policies for some of our workers, critical illness plans. And when the event occurred, we saw the impact and we were able to mitigate cost to the business. Beyond that, her skillfulness in selling the right policy, she's really an avid gardener, so she does exotic gardening. So for those who are going on the health side of life, you can have conversation with her afterwards. She's a very interesting young lady, young, still probably half my age, but has been making stride in the insurance world. And without further ado, I turn her over to you, and I'll allow her to share the screen, tell you more about herself, and also tell you the good things about insurance. So, Miss McBean, you can take the screen and take the show. I think you need to unmute.
Yes, I'm unmuted now. Good evening, all. I typically open my camera at the start to, have a face-to-face introduction. First of all, thank you, Brother Clarke, for having me at today's session. It is quite an honor to be a part of your empowerment ministry. As an agent over the years, I've come across many individuals who just don't know. And truth be told, my mission as an advisor is to empower them to be able to make better decisions for themselves. So I do hope that we'll have an interesting session today. There will be an opportunity to ask questions after the session. I hope you learn something. I hope you'll be empowered to make better decisions and also learn something to share. So I have prepared a PowerPoint presentation that I will start sharing now for us to be able to go through. I will be turning off the camera. Of course, we know that the bandwidth gets a little bit taxed sometimes. So again, thanks for having me, and I do hope that you'll be empowered. I will start sharing. Okay, is everyone seeing my screen?
Yes,
hello? Okay, great. So yes, okay, thank you for that. So Caribbean Assurance Brokers, that's the company I'm from. We're located at 94D Old Hope Road. There's a picture of the building, just so how you can see. So the name of this presentation today is actually Insurance 101. The purpose of it is written from the perspective to give you an understanding of the protections that are available to you through purchasing insurance. So it's really going to be a crash course of sorts that shows you what is indeed possible, gives you a better understanding of the discipline of insurance, and then empowers you to make better decisions to protect yourself. So insurance started in 1618 in London. That's the home of Lloyd's of London. And it started in the shipping and maritime industry. And what was happening in that time was I would have sailors, voyages I would have gone to sea. You would have had a businessman who would have mortgaged his home, would have taken loans to be able to afford the voyage, with the hope that once they were able to get to where they're going, engage in whatever commerce they'd be engaging in there, the returns of the voyage would have benefited him financially. The issue, though, was that sea was a very dangerous place. And and very often the ships wouldn't come back. And at that point in time, his family would be left basically destitute because he would have mortgaged a home, he would have taken their savings, gambling on the voyage being successful. So as a community, what they decided to do was start insurance, where we had the cost of the voyages shared across all the shippers of that time to make sure that no one shipper and his family was wiped off because of the unpredictability of the situation. That being said, insurance by definition is you protecting against an unrealized risk, one that has the potential to disrupt your life financially. Okay. So at its base is sharing the cost of the risk among the members of the community. It's a concept of pool funds where the contributions of many are paying for the misfortunes of the few. So we're talking about expanding what you're aware of, and some of the interesting insurance policies I've come across in my career are these, and these are all real. They operate in different parts of the world, and that's because the insurance companies in these areas found that there was a real risk that the market wants to protect against. So falling coconut coverage actually is very prevalent in some tourist destinations, in particular Hawaii, where they have a lot of coconut trees that can be an attraction, but it can also be a risk. So some of the travel insurance policies come with falling coconut coverage, and if a coconut falls out and hits you in the head, there is, of course, benefit paid out, because that is a risk and one that will cost. Many persons may have heard about celebrities and athletes actually insuring body parts because they believe that there's some economic value. I believe Tina Turner had insured her legs. It's a big part of her brand, and for her it was important to make sure that they were covered. Footballers do that as well, professional footballers. Unexpected wedding cancellation. We can understand the uncertainty in some proposed marriages as an insurance policy that is sold, and multiple birth insurance, persons who are pregnant and the risk exists that they may have twins or triplets. Everybody knows how expensive it is to have children and how difficult it may be to have to cater for two when you could barely only afford one. So though these policies may seem crazy, insurance is about peace of mind, and protecting against these things will allow you to maintain what you've been creating in terms of the wealth that you're generating. Why do we need insurance? As I said, it is to protect against unrealized risk. For a car accident, we have car insurance. Accidental fire, we have property insurance. Untimely death, we have life insurance. Unexpected diagnosis is either health insurance or critical illness. Errors of omission in executing professional duties, as professional indemnity. Understand that in each of these circumstances, a cost that you weren't planning for arises. And if you don't have the insurance to help you cover that risk, you'd have to take monies from elsewhere. If you're lucky enough to have a reserve of funds to be able to cover this expense. So it is important to understand that insurance forms a very important part of what we call a balanced portfolio, because the insurance will provide those monies when it's needed most. Insurance is not a luxury, but it's a necessity, considering the everyday uncertainties of life and those associated expenses. So what I'm going to do now is run through the different types of insurance. And while everybody most likely is aware of the major topic or heading, what I've found over the years that many persons weren't aware of little hidden benefits that the different agents typically don't speak to. So I found these to be very interesting, and I've employed many of them, but the person who was selling my car insurance never told me these things. So we have comprehensive and third-party insurance. Remember, again, this is a crash course. I'm going through very quickly so we can understand the difference. Comprehensive is the policy that covers that if there's an accident, it covers both the person who is responsible and the other party. Third party insurance only covers the other party. So yes, it is cheaper, but understand the policy will only pay to cover the person who was wronged. So if you are the person who was wrong, you are left out of pocket to fix your vehicle. I personally had a decision to make for a vehicle of mine just the other day, whether to go third party or comprehensive. And I actually stuck with comprehensive because the vehicle still had value. And the thought of having to replace my vehicle or fix it in the event that something happened wasn't worth it to me. So I maintained a comprehensive policy. So common benefits of motor vehicle insurance, as some people typically are not aware of, is vehicle repair and replacement. That's if, of course, an accident or it was written off and it had to be replaced. We have an accident, we have theft, we have fire. Bodily injury and death. I don't know how many persons know, but if you're in a car accident and you actually hit someone or you unfortunately kill someone, your policy actually does make monies available to cover those expenses. Property damage, you hit into a house, that's something that is covered as well. This is the part that I found to be very interesting. A rider is a feature of a policy that can be added for a small cost. So that's the riders, and different insurance policies have riders. So an uninsured motorist rider is a rider that you can purchase for your motor vehicle coverage, that if you are in an accident with someone who is uninsured, the policy still pays as if they were an insured motorist, and you will not be left out of pocket because that person did not have insurance. We have accident forgiveness. I was actually very upset about this one because I didn't know that we had accident forgiveness here in Jamaica. And this is something that is available. They just don't tell you. So if you need to put it on, you can. And everybody knows the circumstance of there's an accident and the premium goes up. Having the accident forgiveness rider overrides that issue. Vehicle replacement, in the event you have an accident and your vehicle needs to be repaired, this is when they actually give you a vehicle to use in that down period. Next, we have property insurance. This is something that I personally believe should be mandatory, not a conversation to have now. Very, I would say, contentious one, but the truth of the matter is everybody's property is at risk. And I don't believe the homes in Jamaica are adequately insured, but this is something that you can look into. Protects against natural disasters, fires. I've heard of a lot of fires recently. We have content insurance that covers against theft and damages, and this gives you protection. Your home is actually where you spend the majority of your time, and you invest a lot of time and emotion into that space. And the loss of your home or a part of it can be detrimental to your peace of mind. And this is something that is not as expensive as people typically think. A premium rate example, for a premium of $30,000 annually, you can have coverage up to $2 million, which is a significant enough portion to make a repair that may be necessary. So personal accident insurance, this is actually the cheapest type of insurance. And what it does, it gives you 24/7 worldwide coverage for bodily injury. I have had clients who have slipped and fallen and broken arms and hit their heads and all manner of things that we typically don't think about because we say that we're not accident prone, but things do happen, and having a policy like this does help give you some type of security in that time and space. So we have accidental death, we have dismemberment, we have disablement. Disablement is an interesting thing. A lot of policies have an income replacement benefit where if you are disabled and unable to work, the policy will actually pay a portion of your salary, which again gives you the peace of mind of knowing if this thing does happen to me, what happens to my livelihood and to my lifestyle. And insurance can give you protection in that regard. Medical expense reimbursement speaks to a medical bill that comes out of an accident and you're able to claim back for any expenses related to that accident. Hospitalization income is a benefit that if you are hospitalized, you are in a hospital for an extended period of time, the policy will actually pay an income to you, of course, in line with your income. But that's another benefit that persons typically don't know about. Can I have a little bit of feedback? Is everyone following me so far? Do we have any questions about what I presented so far?
We're following.
You're following. Not going too quickly. All
No,
right.
you're good.
Thank you very much for that. So now we're getting to the things that are more central to your person and your family. Let's speak about health insurance. Many people don't have health insurance. They really should. It is sometimes difficult to sell because persons think that they're healthy and think that things won't happen to them. But when you are exposed to knowing really what happens to others, and that those other persons are no different from you, you think a little bit differently. I have health insurance, and I typically don't use it. But just since this year, I had to go to the hospital for probably like 3 weeks, not being admitted, but back and forth, a whole lot of tests and a whole lot of things. And me having health insurance for years and not using it, being able to rely on it for that period that was completely unplanned, but it was very expensive and very expansive, it was a great benefit to have. So your routine visits, not only to the doctor, but the regular prescriptions that you may have, is important, not only in whatever may pop up, but also checking to make sure that you are okay. Everyone knows how cancer works, how other ailments develop in your body, and because of all the stresses of life, you don't recognize that something is not right. And very often when you find out, it's not too late, but life would have been better if you had found out earlier. So health insurance forms a very good part of your health management. So we have major medical benefits like surgery and diagnostic scans. We have emergency expenses like ambulance as they may come up. And one of the big things that persons need to consider when thinking about health insurance, or even thinking that you don't need it now because you're healthy, is the fact that you can become uninsurable in an instant. Recall that I said insurance protects against unrealized risks. So the moment your risk is realized, you're no longer insurable. So it's very difficult for me when I come across persons with particular diseases that the insurance company will just not give coverage for. And that's only because this person's risk is now realized. Whether or not that person had a propensity towards that disease that they knew about when they were younger, before they were diagnosed, is irrelevant. Once they become diagnosed, the company cannot insure them. And let me explain why it cannot insure them. Remember, the insurance company's responsibility is to protect the viability of the fund. So we spoke about the contributions of many being paid into a pool that when anyone in that community had a need, the funds would come out of it to pay. And in that regard, the insurance company has a responsibility to make sure that when those persons who were healthy and took the decision to invest in the pool earlier have their claims to make, the fund can afford to do it. So because of that, it's important to secure your health insurance when you're healthy, because we know that morbidity will come. So critical illness is a different type of plan. So while health insurance is used to pay the bills that arise, so you swipe your card and it typically pays 80%, you pay 20%, or I should have said that before. So the insurance company typically pays a larger sum of the medical expense, whether it be a prescription or a doctor's visit, and you pay 20%. Critical illness is a different type of policy, still related to health, but it pays differently. So it provides a lump sum payout if you're diagnosed with a critical illness. So the different policies have different benefits. The most comprehensive critical illness plan covers up to 30 critical illnesses. And these are a wide variety. We have cancer, you have things like heart attack, stroke, things like blindness, deafness, loss of speech. It's a whole long list that I have not presented here, but that information can be made available. And the beauty about the critical illness, a lot of the policies are actually written to reduce the level of risk to the insured individual. So one of the key benefits is the fact that the premium actually can be reimbursable at the age of 75 if there's no diagnosis of a critical illness. So in some spaces, it almost looks like savings because you would have received a reimbursement for all the premiums paid if there was no diagnosis. And if there's a diagnosis, you would have received the payout. And the beauty about these plans as well is that they're flexible. So based on what you're able to afford, you are able to purchase a plan that is in line with that. Of course, there are costs to consider because you want to make sure that this insurance plan is sufficient to cover whatever cost may arise. You see, I have cancer facts saying that the average cost to treat cancer is $10 million. Okay, one dose of chemotherapy starts at almost $250,000. You want to make sure that your critical illness plan is able to cover that expense. But truth be told, your money, the money that you spend on insurance now must be something that is manageable. You can't buy a policy that is going to be a strain for you. So while the average cost to treat the cancer may be 10 million, you may only be able to afford comfortably $5 million. My recommendation is to purchase a policy you're comfortable paying for the foreseeable future rather than purchasing a policy that is expensive and you're likely not to carry it through. So in this circumstance, if you're able to afford a $5 million policy and carry that through in the event of a diagnosis, that's better, even if that won't be sufficient to cover the cancer need. Of course, it's a personal decision. And when we get to that part, when you start a conversation in that regard, you'll decide what you're comfortable with. But understand that what this critical illness plan will do is give you some amount of independence. And even if your community is one that is willing to help you, you're helping the community help you. And I believe that's everyone's individual responsibility. Life insurance. This is where people typically start. And I do believe that many persons have what I determine to be negative feelings about insurance. A lot of them are based on life insurance and the way life insurance is sold in Jamaica. My perspective, life insurance is very important and everybody should have one, be adequately covered. I'm going through the benefits of life insurance now. Final expenses. The reality of life is that everybody dies. And when there's a death, there's a whole slew of expenses that people typically don't think about. Why we don't think about it? Because we don't like to talk about death. But the reality is that death happens and death comes with inherent costs. One of the things that I feel personally, I'm personally affected by is, and I can't imagine, is the circumstance of having lost someone who's very important to me. And in the midst of my grief, having to be stressed that because I don't have the money to give them what I believe is an honorable send-off. I just can't imagine it. I wouldn't want to imagine it, but it's something I feel very strongly about. So final expenses is the primary need for life insurance. Everything else is secondary and important, but final expenses where we start. I have to know what final expenses cost. And in doing my research, I know that a burial at Dovecote starts at $400,000. Of course, a package as the funeral homes presented. But that's a lot of money, and that's only one portion of the final expenses. Cremation can start at about $200,000, but again, that's not a drop in the bucket, and that's something that will have to be found immediately in the midst of grief. I spoke to it being everybody's personal responsibility to make sure that death doesn't become a greater burden than it needs to be, and final expense coverage is important in that regard. For some persons, depending on how you choose to structure your financial portfolio, purchasing life insurance can help you to prepare for retirement. We have insurance companies that sell investment-tied policies. So while you have a policy that is a primarily life insurance policy, it does have a investment portion where a portion of your premium paid monthly actually goes towards your retirement. So companies like Sagicor have a very good track record in investing monies for individuals, and you're able to see your money grow over time. And once you get to retirement, this is able to supplement your pension. Providing for dependents is a very important life insurance need. If you are a primary breadwinner for your family, it's clear to see that you not being there to provide for them will lead to some amount of, let's call it, shortfall in the monies available to take care of them. This is simple. Of course, this is more important for persons who have young children. But again, if you have parents who depend on you, it's important to make sure that there's a facility in place to make something available for them. Typically, it can be a consideration of a multiple of your salary, a consideration of what are the needs that they will have, if it's rent, if it's tuition, whatever it is. So these conversations are, when done properly, are deep in assessment, in knowing exactly where you are in life now and where it's that you're going. Access to lines of credit is another important need for life insurance, and it's a mortgage requirement for the majority of mortgage companies in Jamaica, where if you're taking a mortgage, say the mortgage amount is 15 million, the company will insist or require you to have life insurance coverage up to or in excess of the value of the mortgage. So you will need to give them a policy that's valued at $15 million. And the reason, and they assign it to your mortgage. And why they do that is because in the event of your death, and this is just how it is, they prefer to not have to deal with selling your property. First of all, well, that's second. First is removing your family from the home. That's a hassle for them. So what they prefer to do is to just have a life insurance policy assigned. And in the event you pass before you've paid the mortgage amount out, the policy pays for whatever monies you currently owe. And they typically have policies that they sell, which is not best for you. So it's important to be able to know that owning your own life insurance policy that you assign is better for you to insure than purchasing what they sell, which is called a creditor life. So this is where your advisor starts a conversation with you and gives you a better understanding of what your needs are and how you can better serve yourself and not, the mortgage company. Provide for future generations is, I'd say, the last need for life insurance. It's a nice to have, but if you can do it, it's good. There's a scripture that I use in some of my presentations. I didn't have it in this one. It says, a good man leaves an inheritance for his children's children. It's in Proverbs. I can't recall which one it is, but that's a nice to have. And you can appreciate what it's like to be able to give your future generations a start. So why do we buy insurance? The fact is that you cannot out-earn I would save, I would invest in insurance. Insurance makes monies available immediately when unplanned expenses arise. It protects your financial stability. You don't have to go and take out your savings. You don't have to go and liquidate any property. You don't have to go and beg if you don't need to. Rely on charity. It makes monies available for those things that you couldn't plan for in a way that doesn't throw off any future financial plans that you may have had. You don't have to break your investments, which of course will come at a loss. You don't have to sell a property that you had as an investment to take care of your retirement. The insurance is there to pay for those unplanned expenses. Should I also tell you that insurance premiums are much less than the potential payout, exponentially less. And because of that, I typically say insurance savings dollars and makes sense. And in a personal one-on-one conversation, I'll be able to show you how you can really see the difference between what you spend in premium and what you receive as a benefit when the need arises. Most of all, insurance protects your peace of mind, which is very important. Having peace of mind allows you to fulfill your purpose, to thrive, to live more fully, to be more of a blessing because you don't have to worry about the burdens. So I have very good health insurance for me and my mother. She's my main dependent, and I'm happy for it. Why? Because things are there, corona, cancer, diabetes, whatever it may be, and full well knowing that I have this policy in place. If it comes, God willing, I'll be fine because I have a facility in place that will cover whatever expenses may arise. So before I move on, does anyone have any questions about what I've presented so far?
Doesn't seem so. I guess the questions may come at the end, so you can proceed.
Okay, that's fine. I was moving to the other plan. So I had wanted to just take those before, but that's fine. We can ask all questions at the end. So in my discussion with the administration of your church, I became aware of the interment fund that the church has. Where you make a contribution towards the fund, and the fund actually makes monies available to help in covering your final expenses when you die. So to supplement that, I'm introducing the church-made plan, which is a plan that does the same thing, but offers greater benefits. So the whole idea of group insurance is that you're able to get more for less. Understand that we spoke about insurance being the contributions of many, paying for the misfortunes of the few. That being said, the more thinly, someone's mic is open. The more thinly the risk is spread, the cheaper the premium is. So when you're a part of a group insurance plan, the benefits are greater because the insurance company is able to afford the risk because it's shared as a part of a group. So we have lower underwriting requirements, no medical required. As an individual going to any of the insurance companies for a life insurance policy, they will require you to do some form of medical examination. When you're a part of a group, that's not necessary. We have increased benefits because your risk is being shared. The insurance company can offer you greater benefits only because they can afford to. So in this church-made plan, you actually have 3 types of coverage. Then again, of course, the main one is life insurance because we're speaking about final expenses. Lower premiums, a single affordable annual premium, rather than a monthly payment option. And this is an idea of how affordable the plan is. For a death benefit of $500,000, that can cost less than $500 per month. Okay, so it's very affordable, and this is only available to churches. And it's important because we all know that churches are often very involved in the final expense process, in funerals and things of the sort. So the benefits of the church maid plan, this one offers $500,000 payout upon death to assist in the covering of final expenses. As I mentioned earlier, a burial at a cemetery is costing just a little bit less than 500,000. And of course, things get more expensive over time. So 500,000 in my mind is a good place to start. We have accidental death and dismemberment. So we have the circumstance here where if you would die by accident, the payout is actually double. So there's a $500,000 paid out for that as well. There's a percentage paid out for a loss of limb, a percentage of the coverage amount, and that's the accident portion. And then if you become permanently disabled, the policy pays the coverage amount in that regard. Spoke about accidental medical reimbursement in the event that you are in an accident and there are medical bills that come out of it. This policy for the same $500 a month will give you the ability to claim up to $40,000 for medical reimbursement. So these are all things that you didn't see coming that may come, and a contribution of $500 per month will give you the peace of mind in knowing you will be covered. You don't have to think about finding the money. You don't have to think about not being able to cover the expense, because the insurance policy is providing you coverage and protection in that regard. Okay, how the plan works. Each member who is interested would have to express their interest. Of course, not in this forum. This is something that the administration will handle, but I believe it's important to let the persons here now know what it will look like. You complete an enrollment form. Members will have to submit the form and the payment to the church. The church effects the plan. All claims are processed on a reimbursement basis through the church. Premiums are paid by members to the church ahead of renewal, and the church pays over a single premium to the insurance company. It's a very, in my mind, valuable solution. It helps because very often I know that churches are asked to help in one way or another in covering funeral expenses. And again, as members, coverage of this nature is not available as an individual. You're not able to get this type of coverage as an individual going to Sajuk or going to Gaia. This is only available as a part of a group and a church group. Of course, there's a space for individuals to have insurance, individual plans, of course, geared to the other 4 needs of life insurance that I spoke to. But this one, as I said, is the most important one because it's a bill that has to be covered. And this is a benefit that you can have through this plan. I believe in this wholeheartedly. We work to afford the comforts of life we desire, but life happens. Put in place facilities like insurance to help soften the blow when the unplanned occurs. I have hopes and dreams. I have a house I like to build, and I can't imagine having to dip into that fund to be able to cover and plan an unplanned circumstance. So that's why I believe in insurance. Of course, as an advisor, I would have seen it work over and over again. But again, it is for me to share with persons how investing in insurance can help them down the road. Forms an important part of your balanced portfolio. We have your savings, you have your investment, you have your emergency fund, you have insurance. Everything is balanced to get you where you want to get financially. So that's the end of my presentation. Wow, that was only 20 minutes. Sorry about that. Yes, I hope it will. Yes, here for the questions.
Okay. So I am hearing the comment about the church meet plan. You said there is no medical that has to be done. But my question is there a waiting period for this plan to be effective? Because I know that really insurance is selling a promise and it actually becomes real when there's a claim. Is there a wait period for this church meet plan? And if so, what is it?
Can I ask a question as well?
Okay. I'll stop sharing now.
Is there a minimum number of persons who has to be in this church plan? And is there a maximum for this thing to be operative?
Okay, so I can answer the second question first. And the answer to your question is no. I do believe it's reasonable for us to aim to start with 100. And that's on the basis that you currently have more than 100 persons in the interment contributing to the interment fund. It is, of course, better with the numbers being greater. I am aware that your church does have 1,000 persons, 1,000 plus members, and I do believe getting as many of them on board as possible would be good. But we can start with 100.
Okay, and I am supposing that you have an age limit as well.
We do have an age limit. The age limit, I believe, is 60. But I have to actually check that, to be honest. What I did intend to do is that after this session, I would have put together a newsletter of sorts that has some of the clear information as to what to consider when coming in. And that's something I'll do as early as to be sent out on Tuesday. It will have all that information in there regarding the waiting period, the age of admission. I do know that you do have a fair amount of older individuals as members. And I would want us to consider the administration, make proposals as to see how this plan can be used to support the monies in the interment fund to cover what happens after. To be honest, this plan will not meet all needs of the members. A member will not be covered beyond the age of 75. And that's something that we'll have to look into to see how coverage is provided, sufficient coverage is provided for those persons above 75. So after I've made this presentation, I will have to have some conversations with the administration to get a better understanding of how the fund works and what is a vision for the fund in the long term. So those are conversations I will have to have. But coverage is available immediately.
Okay, back to question 1.
If there's a waiting period?
Yes.
And the answer is no.
So you're telling me that if somebody were to buy into this plan this month and the person something were to happen in another 6 or 7 weeks, God forbid, that the claim would be settled?
Okay, so the church mate plan is a life insurance plan only. It doesn't have the health insurance benefits. When we talk about waiting periods, it's typically with health insurance. There's some life insurance policies that don't require medical, that they have some clause in it that speaks to graduated benefit, where if the person dies within 6 months, they're going to get a portion of the payout. But if they live for 2 years, they get the full amount. That doesn't come into this conversation. Understand or remember what I said about group insurance. Once we're talking about a group, the policies work a little bit differently. So being that it is straight life insurance, if someone were to die very shortly after, they would be covered. Understand though, allow me to say this one bit. The plan though it doesn't require medical, they do ask medical questions. So coverage is not guaranteed. So there may be persons who have existing medical conditions who may not qualify. So that's where we speak about the waiting period. I'm guessing that's what your question is in relation to.
Yes. Yes.
Okay. Yeah. So though I said no medical, there are medical questions and there is underwriting that takes place.
Because I do know that there are some companies that ask you to fill out this form, and if for any reason there is an underlying situation, they would want you to go to the doctor and to do certain things. And I'm speaking from an HR perspective because I've seen it, and I'm talking about group plan.
Yeah, man, and that's understandable. And the underwriter reserves the right to ask any questions to determine if they're willing to carry the risk. Insurance isn't guaranteed. So it's a process, but it's the type of thing that once you become a part of, early enough, you're in good standing to see the benefits when you need them.
Okay, thank you.
You're welcome.
Any other questions for Ms. McBean?
Speaking of group insurance, what's the minimum, aside from this church mate, what's the minimum that qualifies a group? The number?
Okay, so we have different, is that the question you're asking? What's the minimum number needed for group insurance?
Right, yeah.
Okay, so first of all, the group is important. So most group insurance plans are written for employee-employer relationships. So we have a business owner who chooses to offer a benefit to his staff to give them most likely like life, health, personal accident insurance, sometimes pensions. Before last year, the number would have been like 40. Since last year, we've had about 3 or 4 insurers who are giving plans to smaller numbers now, as low as 5. If an employer has 5 employees, he's able to start a plan, and those employees would benefit in some way from group insurance. Of course, the larger the number of members in the group, of course, based on the demographics. So if it's a young, healthy group, it's cheaper. And if it's an older, not as healthy group, that'd be more expensive. But when you have large numbers, those large numbers are what allow the insurance company to keep premiums low. So to answer your question, is 5. The minimum is 5.
Okay, so the focus is more for employee.
Yes, in some spaces we do have association plans. You want to give me a little bit more information about why you're asking? Because I probably could help from that regard. Because
not particular, I'm just
okay, all right. So most plans are written to be employer-employee group plans. We have association plans where an association registered as a registered association can have an insurance plan. Those typically are more difficult to manage and the benefits not as good. But we also do have a plan. My company does have a plan that is sold through credit unions, which is called the Gold Series plan. That's information I can share as well in my future communication, that once you're a member of a credit union, you're able to get group insurance benefits. Yeah, which is a very good benefit, because it's an individual who does not have any group affiliations, who typically would not qualify for group insurance. But being a member of a credit union, you can actually apply for that plan and be given both health and life insurance coverage, even some major medical and personal accident as well. It's actually a pretty good plan for persons who don't qualify for groups. I do like always being a part of a group and recommending to my clients to be a part of a group insurance, only because the rates are so much better. Like Even those small group plans that start at 5 members now, the premium on that plan, on the average plan, maybe $5,000 a month. And it does have health, life, and critical illness for the $5,000. As an individual person going to get a standard Sagicor health plan for yourself, just you one, you're paying $10,000. So being a part of group insurance, a group insurance plan really does help.
So suppose a family comes in for coverage as a group. So a large family.
Oh no, I'm sorry. That won't work. So let me tell you why. All insurance companies have a clause that say, I believe no more than 75% or 50% of the people can be related. And the reason for that is the whole idea of group insurance being more attractive when in relation to risk for insurance companies is because of the random nature of it. So if you have 100 people who are not related, it's unlikely that they'll have similarities that make them more risky. So say, for instance, you have a family, 5 people in the family, but the family is predisposed to cancer. That predisposition makes them more expensive to insure. Insurance is
greater risk.
The greater risk is there. So it's not, whenever you have a group, X amount, no more than X amount can be related. So no, a large family won't work. Okay. But the large family could have gone and the different divisions of that family could have gone to the credit union and taken out the Gold Series plan and receive coverage that way.
You had mentioned in the presentation about reimbursement if you did not claim for insurance, say at 75, and you said you would get back the premium that you paid. Just the premium, no interest?
I'd have to confirm that. I can put that in the presentation as well. I actually saw a basic premium in the document, but I'll confirm.
With the COVID and people who are without an income, they were proposing in different quarters for some sort of income insurance for income when if you lose your job or temporary employed. Is there anything in Jamaica like that right now?
So these are persons who have lost employment because their employer let them off because of the drop in work?
Right, yes. So they would be without a job.
No, not that I know of. I had started a conversation with a company a few years ago, but that's not currently available. Hello?
Yes. You had mentioned about mortgage insurance. Yes. And well, we know that it comes with the plan without saying, without you even knowing.
Wait,
what
okay.
The insurance, life insurance aspect of it. But I'm realizing, yes, Jamaica has it, but I don't know, just to say that, well, I don't know of every state in the United States of America that's probably not one feature of their mortgage. While it's something good to have in terms of protection for the family if the person dies, but it's not something that may be available in every jurisdiction.
Well, let me say something. So Life insurance is just life insurance. Life insurance is a policy that pays out on the death of an insured person. You as the individual can decide what you want the policy to be used for, whether this policy is to be used for your final expenses, if this policy is to be used to replace the income of your family, or your income to make sure that your family is taken care of, or if this policy is going to be assigned to a mortgage. So any policy can be used in any ways for you to determine based on, or you to designate based on different legal documents how the policy is going to be used. The thing, and we can't speak about what happens in the US per se, but I know for a fact that in Jamaica, many companies require that you have life insurance assigned to a mortgage. I do know that this practice is very prevalent across the Caribbean as well. And I will say, though I can't say it is mandatory, I know that it does happen in the US. In Jamaica, not all the financial companies require it. Interestingly enough, Scotia doesn't, but I know Jamaica National, JMMB, NCB, all those others require it. So, but it's good to have regardless, because this is indeed a real risk. It's just a matter of making sure, well, my standpoint is covering this risk in a way that works best for you. So while these companies all have something called creditor life that they just sell you, they just sell it to you, and very often they don't explain. The truth of the matter is you owning your own policy that you've bought on your own from the open market is better for you instead of using theirs. In a few ways I'll explain, because people typically don't explain these things. So when you do a mortgage, so the mortgage term is 20 years and the mortgage value at that point in time was 20 million. That's what you owe them at year one. So what they do is that they sell you a policy at, let's use a low figure, at age 30 for that value. What happens over the life of the policy is that they only insure you for what you owe them, but at your current age. So insurance is costed based on age and gender. So the older you are, the more expensive the policy is going to get. So the rate changes over the duration of the plan. So that means in year 15, though you may only owe them $5 million, your insurance cost is more than it was at year one because you're 15 years older. Even worse is the fact that after the 20 years, you no longer have insurance coverage because it's a term policy and the term would have expired. So here you are at age 50, still having insurance needs, final expense, family income replacement. You may want to take on another line of credit. You may want to leave something for your future generations, but taking out another policy at age 50, so it's been much more expensive than the one that you took out when you were 30. So what happens at that point in time is that though you have the need, you may choose not to cover it just because it's expensive. On the flip side, if you had purchased a whole life policy at age 30, you'd have had the policy for the 20 years at the same premium rate that you did have it at age 30. And you'd still have the policy to do to cover whatever the other insurance needs are when they arise. We even have some policies that offer what we call return of premium. I sell a particular policy that after the mortgage term or after the term, you're able to receive a reimbursement of 75% of the premiums. That's attractive, and well, that's a US dollar policy. So I know that one doesn't offer interest per se, but it offers US dollar return, which of course would be interest protected in some sense of the word. And you're able to receive a return. So when we talk about financial planning, I have clients who purchase a policy like that and say, well, when I get to 60, I have this lump sum to look for, and this lump sum can either help me with my retirement expenses, or it can treat me to something special, a trip around the world or whatever. When you stop and you think about what your financial plans are, you're able to use the different products that are available, be it insurance or investment, to see how you create for yourself the life that you want to have. So knowing is of great value.
Okay, I really asked that question because I know someone died in the US. He died, and after that, the mortgage company, he left his wife, and from the death, the mortgage company proceeded to sell the property.
Okay, but that's a bad thing, right?
That's that.
Was it a bad thing or was it a good thing?
Apparently, the husband, he was the one paying the mortgage, and so when he died, so for some reason they sold the house. The property.
Well, let me tell you, that's a bad thing. And you're able to protect yourself by having this policy and protecting your estate by having the policy. What happens, or what I imagine would have happened, is that that house would have been sold for much less, or could have been sold for much less than the market value of the house. Why? Because the mortgage company's interest is in recovering what their interest is in the property. I don't know if you people would have known, but our local real estate companies sometimes have private treaty listings. So a private treaty listing is a circumstance where somebody took out a mortgage on a particular property and defaulted. And the private treaty properties are typically sold as is, where is at a cost that is much lower than the market value. In that circumstance, the mortgage company is disposing of the property to recover only maybe a little bit more than what they're owed. But in that circumstance, the family of the person is so short. They may not have access to the proceeds, which would have been the full value of the property, but they get what is left after the mortgage company sells it, if the mortgage company sells it at an amount that is high enough to cover what was owed. So again, this person would have spent their time, they would have invested, they would have worked hard to be able to procure this property. And they would have had some amount of equity in there that you want to protect. So insurance offers protection in that regard, that all that happens is that the bank gets what they're owed, and your family is able to move on with the asset to live in the home, to sell it if they so choose. But the value that you would have sacrificed for in terms of purchasing and maintaining that property would not have been lost. So my advice is always to get a policy to cover it, whether or not it's mandatory. Just find one that is cheap enough that it doesn't become a burden to maintain.
Thank you, Ms. McBean. Are there any other burning questions from anyone else? Okay. Well, Ms. McBean, on behalf of the Boulevard Baptist Church, I want to thank you for your eye-opening presentation on the Insurance 101 and the history of insurance, and really how having insurance can make our lives easier when the risk occur, and also not having insurance, what can happen with the impact on your savings and investment. And I think the last question, which was asked by Sister Sophia, demonstrated that not having life insurance on the property, and in the event of death, the estate can lose the property. So I thank you, and we will look out for the documents you'll share with the church, and then the administration will now communicate to the membership the all aspects of the church meet, and then we see how we move from there. So I thank you, and I also want to bring this meeting to a close. I'll ask Sister Elaine to just give us a word of prayer tonight as we close.
Let us pray. Great God, thank you that we can meet in this fashion. Thank you, Lord, for opportunities like this one, in which we not only learn, but we can share our ideas. Father, your word tells us in Proverbs 13:22 that the good man leaves an inheritance for his children's children, but the wealth of the sinner is stored up for the righteous. Help us to be good men and women so that we can do something not just for ourselves, but for children and their children. Father, help us to use this information garnered this evening to augment our caring for not just our friends and families, but for all our sisters and brothers whenever we encounter them. Lord, we know that when one lives for others, one truly lives. Help us to truly live. Thank you for the presenter this evening. Thank you for everyone who tuned in. And Father, help us to do all as unto you. And we say this all in the name of Jesus Christ, your Son. Amen.
Amen.
Amen. Thank you all. Do have a good week. And God's blessing go with you. Good night.